Raise your hand if you've got a watch on. You, sir. Let's take a look at your watch. Show it to me, just like this. It's a nice watch. Okay. I've got an offer for you. I'll give you a bag of money for your watch. There's 500 shells in here. This is the oldest, most established form of money that humankind has ever used. It's been used for 12,000 years. In fact, in certain parts of the Solomon Islands and Papua New Guinea, it's still in use. What do you say? Thanks. Still no deal. All right, clever man, clever man. You've got me up here on stage. You got me in a tight spot. I'll give you 2 bags of money. That's 1,000 shells. What do you say? Same answer. No big surprise there. I wanted to illustrate a point. The point is that we've lost trust in cowrie shells as money, despite the fact that they've been used for 12,000 years. Money moves on. People move on to new forms of money. They moved on to gold. They moved on to fiat currency. We're now moving into electronic money. And we think that there's some interesting opportunities in terms of investments to be had. So I'd like to spend the next few minutes and take you through some of those opportunities. A little bit about my background, as was previously mentioned, I think. I'm a partner at Redwood City Ventures in California, and we focus on Chinese businesses and collaboration with American businesses. We started off with Bitcoin mining and things of that nature back in 2013. I spent several years before that at a private equity firm in the Bay Area doing leveraged buyouts. A couple of notable projects. I'm an advisor for Science Inc.'s new blockchain initiative. We've started a blockchain incubator based out of Los Angeles that will help new blockchain-based companies with ICOs and with other aspects of their initiative as well. Science Inc. has quite an excellent track record. We sold one of our portfolio companies to Unilever last year for $1 billion in cash. So we hope that we can take some of that success and bring it to the blockchain ecosystem. In addition to that, and focusing back on Redwood City Ventures, one of our notable portfolio companies has become the largest blockchain security data center in North America, aka Bitcoin mining, but we've expanded to other crypto assets as well. Okay, so let's move on. This is the basis of our fascination with Bitcoin. It's many things to many people, from peer-to-peer networking to open source software development, etc. But to us, it's the genesis or the union of e-commerce, social networking, and monetary factors. We find fascination in that because we see it as a powerful catalyst for spectacular growth and mainstream adoption. So let me tell you a little bit more about the way we see it. The title of my talk was Bitcoin's Killer App, How We're Going to Achieve Mainstream Adoption. Specifically, what I think that means and what my team thinks that means is a killer app just means achieving mainstream adoption. We haven't achieved that. Despite all the popularity of Bitcoin and everything you hear about Bitcoin, when you look at the numbers, it just hasn't achieved mainstream adoption yet. Number 2, Bitcoin's killer app isn't some new use case, although there are many fascinating use cases and applications and startups being developed in the ecosystem. Bitcoin's killer app is actually Bitcoin itself. If you refer back to the silly example that I used at the start of this thing, money is evolving, and Bitcoin, as you'll see in a couple of slides, has some very unique properties and characteristics that make it a fantastic form of money. We have a lot of product marketing and online customer acquisition experience, so we feel, in my firm and my team, we feel like we're particularly well suited to take on the mantle of this customer acquisition campaign. We're not doing this for altruistic virtue alone. We see a great return on investment opportunity, and I'll take you through some of that in a few slides. And I openly invite any of you and all of you that are interested in participating in this initiative, once you learn about it, to reach out to me, reach out to my team, because we're looking for assistance in any way that people are willing to offer it. Okay, so a little bit of context about the way we're looking at the problem and a little bit of process for supporting our position. So we're looking at Bitcoin not as a constellation of individual startups, we're looking at Bitcoin as one product. So if we have one product and that product is Bitcoin, how do we take that product to the market and achieve mainstream adoption? There's only 600,000 people who currently own one or more Bitcoin in the world today, which is a staggeringly small number, given the fact that the total addressable market is over 3 billion internet-connected adults, and the fact that we hear about Bitcoin almost every day in the media. There's a well-proven process for going to market with a strategy like this for customer acquisition. I'll take you through some of the details of that. Okay, the first step here is to establish our first principles. We got to ask some basic questions and establish our foundation. We don't have too much time, so I'm going to blast through this and get into some of the details. So the first principle is this: what is our product? Well, our product is Bitcoin. So what is Bitcoin? Well, we got to ask ourselves an even more fundamental question than that. What is money? We talked a little bit about money, but let me take you through a few more details. So money serves three purposes. It's a unit of account, it's a means of exchange, and it's a store of value. And it turns out that there's interesting and useful ways to compare different forms of money against each other. So let's dig right into that. So there's 6 characteristics that you can use to compare different forms of money with each other. They are scarcity, durability, divisibility, recognizability, fungibility, and transportability. Now, 4 out of 6 of those are pretty self-explanatory. Recognizability has to do with the ease with which you can counterfeit it, and fungibility means, can you exchange one unit of that money for another unit of that money? If I have a $100 bill and you have a $100 bill, can we trade our $100 bills and both be happy? That's high fungibility. But it all boils down to the trustworthiness of the money. And that's what we talked about at the outset of this presentation. Now, we went through and we tried to compare or score a few forms of traditional money. So you can see from cowrie shells to US dollars, Argentinian pesos, frequent flyer miles, and Starbucks cards. Now, I'm not disparaging fiat currency. I'm not disparaging government. I'm not trying to overthrow anybody. I think there's a great place, and there's going to be continuous use for fiat currency indefinitely into the future. What we're trying to propose is that Bitcoin is a unique asset class that has a target market that's ready to adopt it in a mainstream way. So if we look at the moneyness of Bitcoin, and we score it along those 6 dimensions, these are polar or radial charts, if you will, where we just scored the form of money from 0 to 4 on the 6 dimensions, and Bitcoin came out 22 out of 24, which is a pretty good score. So now let's look at all of them. And this is kind of in chronological order, but you can see that Bitcoin looks quite good. And again, we're not disparaging fiat currencies. The problem that we see with fiat currencies, unfortunately, is that there's a disparity between the way people want to use fiat currencies, which is often as a store of value, and the specific elements of the way fiat currencies are used in the financial world. And so it often punishes people that try to save their money or their wealth in fiat currency. All right, so the current situation, we've got 600,000 people that own a Bitcoin. We've got a Bitcoin price, we've got 300,000 transactions per day, a large number of Bitcoin traded each month on the global exchanges. We've got some developer turmoil, crackdown in China, and we've got geopolitical risks increasing. So how can we use that information? Well, one of the details that we noticed was that there's an interesting trend that took place over the last 2.5 years, which is that we saw an average monthly growth in the customer base of Bitcoin of about 2% monthly, and that's people that own at least one Bitcoin. And interestingly, we see a corresponding average monthly growth rate in the price of almost 10%. Now, you could say that's just correlation, there's no causality there, but we believe there's strong evidence to show causality. And what we'd like to do is we'd like to try to accentuate the organic growth that we're already seeing. We'd like to reach 1.2 million people owning one or more Bitcoin, but we've got to elicit the right emotions. We've got to, if we want people to act in a certain way, we have to elicit the right emotions. There's proven psychological ways to do that. We can sell Bitcoin, our product, in certain ways. I don't have time for the details of this. Our goal here is product market fit. We don't need to move our product to the market. We just need to refine our message and wait for the market to move to our product because of some of these geopolitical risks and because of some of the awareness that people are having in growing numbers around the world. Okay, what transactions can Bitcoin improve? We don't have too much time for this, so I'm going to keep going. We're going to target individual investors. What resources do we have? We've got extensive product marketing and customer acquisition experience, etc. We've got a mainstream target market that's poised to embrace Bitcoin. We have a network that just won't die, despite the fact that every year, throughout the year, criticism. Bitcoin continues to grow, Bitcoin continues to flourish. That's the novelty and that's the strength. Okay, so let's get into the specific details of our campaign. Who? We're going to go for individual investors, as I mentioned. Maybe somebody that has an online brokerage account. We're going to pick 8 or 10 specific geographic locations because we want to refine our focus. We need to concentrate our efforts in reasonable areas. And we've listed those here. You can see at the bottom that the target is really only 2,500 new customers per month per region to achieve our 600,000 new customers over the next 24 months. Very reasonable, very doable, very practical. Okay, number 2, what's our pitch? The most unique store of value ever created. It's inconceivably scarce. 54,000 new Bitcoins created, et cetera, et cetera. Moving on, value is up over 5,000% in the last 4 years. If you would have invested 1% of a diversified portfolio into Bitcoin just 3 years ago, you'd have doubled your entire portfolio by now. That's a very compelling message that speaks to the lower levels of Maslow's hierarchy of human need. There's also there's significant evidence to suggest that this price appreciation is going to continue in lockstep with the growth of our customer base. And I might also note that there's over 250 million people around the world who already own gold as a store of value. So it's a very short step to go from gold to digital gold. Non-correlated asset class, I mentioned that. We don't have time to get into the details. This is just some evidence to support that. This is John Exter. So in case there's any question about the importance of moneyness, this should dispel some of that uncertainty. He was the president of the New York Federal Reserve Bank in the mid-1900s, and he kind of agreed with us. Performance during 2015 was good. 2016 was even better. 2017, we didn't even bother putting it on here. We don't need to hash through the details of Bitcoin's appreciation, but let's get to the outreach strategy. Now, much to the perhaps disappointment of a certain Mr. Jamie, we'll call him, in New York, we're not proposing a fraud. We're not proposing a Ponzi scheme here. We're not proposing some MLM scam. We're proposing the marketing tactic that's successfully used by every single one of the largest online businesses on the planet. It's an affiliate marketing program whereby affiliates are compensated for acquiring new customers on behalf of our product. Again, we're looking for 600,000 new customers over 2 years. That's only 60 customers per affiliate. There's proven ways to spread the message. We're looking for viral growth. We want a coefficient of growth that exceeds 1.0. There's ways to measure our success, iterative loops. The monthly metrics that we're going to look at are referral volume, growth of wallet, cost of new customer acquisition, and here's the budget and the schedule. So we're looking at $50 per new customer, paid in Bitcoin, $500,000 per month, and campaign duration of 24 months. Now, this brings me to perhaps the most interesting and what I think is the crux of this whole campaign and why we see such an opportunity. It's the virtuous cycle that we believe we can set up with the due to the price elasticity of supply in Bitcoin, which is the opposite polarity to almost every other product known to mankind. And what I mean by this is, as price goes up in Bitcoin, supply actually goes down, so it'll send the price up even farther in an escalating cycle. We just want to prime the pump. Now, we've committed $100,000 a month of our own capital. We've got a couple of additional parties that have filled in another $200,000. Of course, we're looking to fill the remaining $200,000 before we get started. We see an incredible return on investment. TVPI of 813%. That's a very attractive investment profile. The ROI and the expenditure is almost 2,000%. And that assumes that we only hit a 5.5% appreciation in the price of Bitcoin per month, which is half of what we've seen over the last 2.5 years. Now, here's a little sensitivity analysis. We could do better. If we hit 10%, which is what we've seen, our expenditure ROI hits 7,000%, which is positively ludicrous. Some data points that we don't have time to go into. Now, what are the risks? We have regulatory crackdown risk. That's probably the biggest risk that we've seen. We see news to that effect. We've got a few other risks, but let's dig into the regulatory crackdown. China closed all the Bitcoin exchanges, or in the process of doing that. What effect did it have on the price? It actually had much less effect on the price than what we would have expected. The reason for that is total trading volume globally is only about 4% in China today, because the rest of the world has grown so much. People worry about capital flight, Bitcoin being used for capital flight. We think that's kind of a silly idea just because of the fact that Bitcoin is so small. $8 billion worth of Bitcoin sitting on exchanges around the world relative to 70 trillion and 81 trillion of money and total stock market value around the world would be the equivalent of trying to fill your swimming pool up 1 teaspoon at a time. It just isn't feasible. So now to the conclusion. Bitcoin is already wildly attractive to 300 million people. We just need to refine the message, and we need to focus on the target markets that we believe that we can hit. We have the resources to execute a successful go-to-market strategy. We've done it many times in the past. Campaign ROI will be enormous. The campaign is practical, and we believe, to get to the altruism a little bit, that this is maybe one of the most beneficial things that we can do for the whole Bitcoin ecosystem, because we won't be the only beneficiaries of the increase in Bitcoin price and the success of this campaign. Of course, we're positioned appropriately so that we will, but every single startup will benefit from this appreciation and the success of this campaign. So it's just going to make the ecosystem that much richer and that much more vibrant. And please, as I said before, please reach out to me, reach out to my firm. My email is down here, my Twitter, my LinkedIn. Please find me if you have any interest in participating with us. I'll just leave you with this last chart on the transportability and scarcity of money. Thank you so much.